You don't have a money problem. You have a leak problem. If you're making $50,000 a year and still feel broke, it's probably not your income. It's leaks you stopped seeing. A money problem means you need more coming in. A leak problem means cash is already flowing through your hands and disappearing before you ever feel it. $300 a month sounds impossible when you're staring at that salary and a stack of bills, but that figure isn't hiding behind a side hustle or a second job. It's draining out quietly, in amounts small enough that you stopped noticing them years ago. I spent 10 years in construction, worked sites, read blueprints, got paid by the hour. I found my 300 the hard way, going through every line of what I was spending and realizing how much I'd handed over without making a single decision. This is the follow-up to the last video about why your first $10,000 is harder than your next $100,000. If you watched that one, you already know the goal. Find $300 a month, put it to work, and let compounding do what it does. Today, we're not talking about motivation. We're talking about location. Where does the money actually live? Let's get one thing off the table. Standard finance advice will tell you to cut your coffee. Let's do the math. A coffee a day at roughly $4 is about $120 a month. That's assuming you're getting one every single day. And that math only works if you're willing to cut one of the small things that makes a shift bearable. That's not a financial strategy, that's a morale problem waiting to happen. This isn't about cutting coffee, this is about plugging leaks. Here are 6 places the money is actually hiding. Stick with me through all 6 because the bigger ones usually show up later in the list. The first is subscription stacking. This is the silent monthly bleed. Streaming services, fitness apps, delivery memberships, software you signed up for during a free trial and never canceled. Most people are carrying somewhere between $80 and $150 a month in subscriptions they either forgot about or only use once in a while. Pull your last 2 bank statements and highlight every recurring charge. Not to judge yourself, just to see it. A lot of people find $40 to $60 they can eliminate in under an hour. The second place is your phone bill, your internet, and your insurance. These are the set it and forget it accounts. You signed up, set up autopay, and haven't looked since. Carriers run promotional rates constantly. If you haven't called your phone company in the last 18 months and asked what current promotions apply to your account, you are likely overpaying. Same with car insurance. Rates shift, your driving record improves, your car depreciates. A single phone call to shop your auto policy can save $30 to $80 a month. Internet providers are competitive right now. Negotiate or threaten to leave. This category alone, touched properly, can return $60 to $100 a month. The third place is your bank. Maintenance fees, out-of-network ATM charges, overdraft fees. These feel small per occurrence, but they stack. If you're paying $12 to $15 a month in account fees at a traditional bank, that's $180 a year. High-yield savings accounts at online banks currently pay meaningfully higher interest than standard savings accounts, and many carry no fees at all. Moving your emergency fund to one of those accounts while eliminating monthly fees is a double gain.
Now we move from money you're losing to money you're not even picking up. This is the part most people skip, and it's usually the most expensive mistake on the whole list. The fourth place is your workplace. If your employer offers a 401k match and you aren't contributing enough to capture the full match, you're handing back part of your compensation. That isn't an opinion, that's math. Beyond that, health savings accounts for those with qualifying plans let you set aside pre-tax dollars for medical expenses. Pre-tax commuter benefits exist at many employers and can reduce taxable income. Employee discount programs cover everything from cell phones to rental cars. Spend 30 minutes with your HR portal and you'll likely find something you didn't know existed. Drop a comment and tell me which one of these you're going to fix first. I'm curious which leak hits closest to home. The fifth place is your tax withholding. This one is counterintuitive. If you got a large refund last tax season, say over $1,000, that felt good. But what it actually means is that the IRS held your money for up to 14 months and paid you 0 interest on it. You overpaid every single paycheck. A W-4 adjustment with your employer can put those funds back into your check now, where you can actually use them or invest them. If your refund was $1,200, that's $100 a month that belonged in your pocket all along. The sixth place is your annual auto-renewals. Software subscriptions, warranty plans, roadside assistance programs you duplicated through a credit card benefit, annual memberships to clubs or services you no longer use. These hit once a year, quietly, and because they aren't monthly, they don't feel like drains. But they are. A systematic audit of annual charges, which you can find by searching your email for receipts with the word renewal in them, can surface $50 to $200 in a single pass.
Now here's the math. You don't need to win all 6. You need 3 or 4. Subscriptions cut? $50. Phone and insurance renegotiated? $70. Full 401k match captured? $100 in employer contribution. Tax withholding corrected? $80 back per month. That's $300 without changing how you eat, what you drive, or how you spend your weekends. The lifestyle didn't shrink. The leaks got plugged. And if you're thinking this won't add up the same way for your situation, that's exactly why the audit comes first. Your leaks live in different places than mine did. The math doesn't change. The locations do. Here's what you do this week. Not this month, this week.
Day 1. Pull 2 months of bank and credit card statements. Highlight every recurring charge. Total it up. Don't react, just see it. Day 2. Call your phone carrier and your auto insurance provider. Use the words, "What promotions are currently available for my account?" with the carrier, and "I'm getting a competing quote" with insurance. You don't have to follow through on the threat. Just say it. Day 3. Log into your employer benefits portal. Find the 401k match details. Find any HSA or FSA options. Find the employee discount section. Spend 20 minutes. Day 4. Look at last year's tax refund. If it was over $1,000, search IRS W-4 estimator and run your numbers. Then update your withholding. Day 5. Search your email inbox for the word renewal. Look at what hits annually that you haven't examined recently. Cancel or downgrade at least one. That's 5 days. That's real dollars, not theoretical, not someday. Money that is currently leaving your account on autopilot. Let me know in the comments, what was the one on this list you didn't realize was costing you? I'm genuinely curious because this list looks different for every person, and the comments on these videos are usually where the most honest conversations happen. The next video covers what you actually do with that $300 once you have it, specifically the order of operations for someone starting from 0 or close to it. Finding the $300 is step 1. Using it wrong puts you right back here. The order matters more than the amount.
See you in the next one. Let's build some wealth.